this is, I'm Linda Fettig. I do some special projects for Grow Nebraska, and I want to thank you all for participating. We probably will hear people joining us because I don't think we have the full contingent on yet. It would be helpful if you would mute your phones unless you have a question. I know this is lunch hour for a lot of you, and so if you would mute while Dan is presenting, that would be great. First of all, I'd like to introduce Monica Braun from the Rural Enterprise Assistance Program, otherwise known as REAP. And REAP is one of the sponsors for our third Thursday training session. Monica, would you like to say a few words about REAP?
Thank you, Linda. I would. Could you first tell me how do you mute with this so when I'm through I can mute? Is it *6?
I'm not sure.
Okay.
Every phone is different.
Okay. Well, REAP is a program of the Center for Rural Affairs, and it provides technical assistance, training, and loan funds to what we consider microenterprises, and those would be businesses that are 10 and under employees, and many of our clientele are sole proprietors. The microloan fund is we loan up to $50,000, and we have a Quick Grow Express loan, which Grow members are eligible for loans up to $10,000, and we do have an online loan application that you can just go online and complete. We provide business training, and that's kind of what the Women's Business Center does, is the training arm. We have a Business Plan Basics 5-week session. We have one of those starting in Broken Bow on September 8th, and we're exploring the possibility of one in Knox County this fall, so if you're from that area, let us know. We provide QuickBooks training, and we take these out in small groups. We have laptops in sets of 5 so that we can do small, more individualized sessions. We have just piloted a startup seminar. It's called So You Want to Start a Business, and it explores that. We had one in Tecumseh last week, and we have one coming up in September in Beatrice, September 16th, partnering with Glennis with Engage and the Chamber and Main Street. We are located all around the state. Our REAP staff are, so we come to you and meet with you at your site or your home, wherever your business is located, to help you. So we're out there and we want to help. So just give us a call or check our website.
I believe there is a handout that was either emailed or can be emailed to everyone about the REAP program. Thanks, Monica.
Thank you.
Now, what you've all been waiting for and what you called in for. Our presenter today is Dan Hoffman from Invest Nebraska. Dan, would you like to tell the listeners a little bit about your role with Invest Nebraska and then help us all get a better understanding of angel investing?
All right. Thank you, Linda, and thank you, REAP, for sponsoring this afternoon session. A little bit about my position here at Invest Nebraska. I'm the COO of Invest Nebraska, so we have 4 employees. We brought on in 2012, when we started making equity investments, we brought on an individual as our CEO, an investment manager who has experience in venture capital and private equity. It was Mark is originally from Washington, D.C., has never been to Nebraska until he came for his interview, and came here. I think it was on a beautiful March snowy day, very, very cold, but looked at the landscape and saw a lot of potential for what we are trying to do and working in Nebraska. So he's been here for 2 years now. But we have our office. We have 2 other full-time employees, and then we pull in interns from the law school and from the University of Nebraska Lincoln campus and the business school. But a little bit about Invest Nebraska, and Heidi forwarded me the list, so I'm familiar with some of you that are on the call. A little bit, though, about Invest Nebraska. So we're a venture development organization that assists entrepreneurs and invests in Nebraska businesses that have high growth potential, so companies that are going to be able to scale and grow quickly. Sometimes those are technology businesses, and sometimes they're not. But we were founded in 2002 due to some legislation that was enacted by the legislature at that time, and our founding members were members from the business community, from the University of Nebraska, as well as DED. And we're organized as a 501c3 nonprofit. As a public-private partnership with the Department of Economic Development. So we have a board of directors of 11 individuals. Dan Curran, who some of you might know, serves on our board as our ex officio member. But we kind of operate as a corporation. We have quarterly board meetings, executive meetings on a monthly basis. We have investment committees, which is, Jim, as within the Nebraska Enterprise Fund, he has loan committees. So we have a lot of good corporate governance in place when we make any kind of financial decisions. Our funding mainly comes from DED, but also from USDA Rural Development and then private foundations as well. But we're located, some of you might be familiar, the old Technology Park, which is in North Lincoln. Now it's called the Technology Development Center since the start of Innovation Campus, but it's owned by the University of Nebraska Foundation. And there's other tech businesses out here. We have a couple bio labs out here, a couple IT companies as well. What I wanted to kind of do today, and Heidi, I don't know how these have worked in the past, but I'll slowly go through the agenda that I had. It helps me organize my thoughts, but I think if anybody has any questions, I'm more than willing to feel free to interrupt me. And
that's normally what we do. So
okay.
If anybody has any questions, I know Linda said to mute, but, just unmute yourself and hop on in. And Dan, I think your agenda is great. We'll just go with that for now.
Okay. So a little bit about angel investing and how we've started to take a closer look at this. We have a relationship with NIFA, the Nebraska Investment Finance Authority, that has provided us a grant to look at angel investing, which deals with not only educating businesses and communities about angel investing and why it's important, but also establishing some angel funds in the state of Nebraska. We kind of see the angel education component as being a key because a lot of people don't understand angel investing or what it is or why it's maybe important to their business or to their community. Also, we, with Invest Nebraska, are a member of the Nebraska Angels, and I'll talk about them a little bit, but they're a loose-knit organization of about 40 angel members from the Omaha-Lincoln area that meet on a monthly basis. And when I get to that, we can talk about how they conduct their business, and that's helpful, I think, for communities to understand as well as businesses. But then also we've started to reach out to individuals in Nebraska who are considered angels who have either invested alongside some of the deals we've done or have expressed interest in things that they're maybe willing to look at for potential investment. So to start off the discussion really is, what is an angel? And what we always fall back to is the Securities and Exchange Commission definition of an accredited investor. So back in 1933, the Securities Act was passed, of course, during the Great Depression with everything going on. But under that act, it kind of laid out about 16 different types of entities or potential individuals that could invest in companies privately. Now, as you would expect, and you oftentimes hear this in the news about somebody going to an elderly person or somebody who didn't understand what they were putting their money into, and the person wasn't maybe registered as an agent with the Securities and Exchange Commission, and the family or the individuals lost a lot of money. What the SEC said is, look, individuals that are considered accredited investors, and the two definitions they have for actual individuals are, one is if the individual and he or her or their spouses together have $1 million of net worth, which excludes their primary residence, or if the individual has earned $200,000 in each of the most two recent years, or $250,000 with their spouse, and they have the potential to earn that in the coming year. And the reason why is because a lot of these deals that angels are going to invest in, there's a good chance they are going to lose their money because these are very, very risky deals. But individuals have also made a fair amount of money investing in deals as well. So when we talk about angel investing, we're kind of looking at these type of accredited investors, individuals that understand the type of risk that they're taking on, but also have the means that if they were to put $100,000 into a company or some amount, chances are if they lost that money, it wouldn't ruin their lives. So what's been interesting as time has gone on with who are angels and what we're trying to do in developing, we've also, as some of you might have heard, just in the last couple of years, the Congress passed the Jobs Act, which allowed for the Securities and Exchange Commission for the first time to go out and allow non-accredited investors to invest in companies through crowdfunding. Crowdfunding has gotten a lot of buzz lately. And to give you an example of crowdfunding where somebody who has their business idea, they go through a group or a website to say, hey, I'm looking for $60,000 and I'm willing to offer this amount for my company. And they have people that are interested in putting money in at very small dollar amounts. Maybe it's $1,000 or $2,000, some amount. The Securities and Exchange Commission has not issued their final rules yet for their crowdfunding regulations, but we expect that here in the next year or so, and that's going to kind of change the landscape as well. And these are obviously when you put that on a website, it becomes a public offering, where a lot of the stuff that we're doing is mainly all private offerings, just private negotiations between individuals and businesses. There's also a couple others out there that I kind of consider angels, but kind of quasi-angels. Some of you might have heard of Kickstarter, which does a really good job of you put your idea out there on the business, and usually it's more around the arts and entertainment, and individuals will donate money to that potential project. And then there's Kiva, KIVA.org, that really is a micro lender where individuals decide to go ahead and loan the business in usually disadvantaged areas, smaller dollar amounts, but they have a good track record of loaning the money or paying the money back. So you kind of see a wide spectrum of, the accredited investors all the way down to more of that Kickstarter, Kiva type model. So why do angels invest? Well, really two reasons. A lot of times they want some type of financial gain. Now, in 2011, the legislature here in Nebraska passed the Angel Investment Tax Credit that provided, and keep in mind this was a result of the Battelle study that was done in 2010, but there wasn't, we don't have a very robust capital continuum here in Nebraska. We have great banks kind of on upstream. We have very good micro lenders that help, as Monica mentioned, getting businesses funded, whether they're lifestyle type businesses or businesses that are, kind of at that startup stage that maybe have some high potential growth. But in between, we aren't doing a lot in Nebraska. And part of that is we don't have a robust angel network, a lot of angel funds out there. But, for a startup business, they need to get some capital as they go through that business life cycle. And hopefully they'll get some bank loans, but if they're more of a technology-related company, banks aren't going to be able to necessarily finance them because there won't be a lot of collateral, and they can only personally guarantee probably up to a certain amount. So you do need those angels in to help with some of the businesses. So the Nebraska Angel Investment Tax Credit, how it works is angel investors, and there's a certain type of companies that are allowed under state statute. But individual and angel investors work directly with the company. The individuals have to become certified by DED, and the business has to become certified by DED. And then it really is just a negotiation between the two, and then they, at some point, if there's an investment made, they let the department know that, yes, we made this investment. And for an example, let's say it's $100,000. What the state does then is says, okay, we will we recognize that $100,000 investment, and the state of Nebraska then will provide that investor, and they have to be Nebraska residents. They provide them a investment tax credit, a refundable tax credit of up to 40%. And that's significant. I mean, it's one of the higher dollar amounts in the state or in the country. But it also lessens the risk for those individual investors as well. And it allows them to, they'll initially get that return back right away on their taxes from the state of Nebraska. It's been a very popular program. The legislature appropriated $3 million a year, and usually it's gone in the first couple of days. So I know the legislature is looking at, do we put more money into it, or do we change the type of businesses that should be invested in? So they're looking at that right now, but that's kind of changed the landscape a little bit. But when you look at why angels invest, obviously some of them prefer the financial return. They want to put money into a company, and they want to get a significant amount back. And sometimes I think businesses, and I know maybe some of you have watched Shark Tank, really that has become a really good kind of example. And these guys that's on the Shark Tank they're sharks. But I think in Nebraska we have a different type of angel investor who is a little bit more patient, is willing to negotiate, and really wants the business to go ahead and possibly succeed as well. So for financial gains, when angels put money in, what they're looking for from the business, number one, is the team who's running the business. Do they have the experience? Because these angel investors oftentimes are business owners themselves, possibly they're retired, but they don't have the time or really the want to run the business. They want to be able to put money in. They want the management team in place. They want a good business plan, but also they need a business pitch of, hey, what's this business trying to do? How are they going to get to market? How are they going to get customers? And how am I someday going to get my money out of this? For loans and banks, we know how we pay money back with principal and interest, but they want to know, is it 4 years? How are you going to get me my money back? And that's a very important piece to this, is because they don't want to invest $100,000 and never get their money back. And we're having more and more of those discussions on ways that businesses can get that money back. And sometimes it's a mandatory, what's called a put option after a certain period of time, where the business owner has to pay the money back to the investor at a higher return, and usually it's much higher than a loan. But the investor has put money into this company with no guarantee at all that it's going to be successful, where a bank is going to take collateral of the assets, take some personal guarantee probably maybe of the business owners or family members. So financial gain is really important, but here in Nebraska, we've also run across examples of individuals who are accredited investors who say, look, it's time for me to step forward in my community. We need to make this investment. Yes, someday I want my money back, but my number one purpose of doing this is for economic development reasons. And that's important as well. And we find that in talking with businesses and investors, we find that in the rural areas, and we even find it in the urban areas. And we've run across those examples even with the Nebraska Angels. And, if you were to survey them as a group, you probably would get a mix where some of them would be investing for financial gain, and others would be doing it for the betterment of the Nebraska entrepreneurial ecosystem as well. So that aside, the financial gains, sometimes it's altruistic, but why would a business or why does a community need angel investors? Well, again, when you look at these type of individuals, the demographics of them are usually, most of the times, they're males, and that's mainly because they're business owners. Sometimes you get into lawyers and professionals, but oftentimes they're business owners who have successfully run their businesses, and they want to give back, whether it's for financial gain or for altruistic purposes. but they're wanting to give back in some way. And what they bring to the table, just like these individuals that are on Shark Tank, what they're looking for is really that helpful mentor who has been there and done that. Somebody that can hold their hand when it needs to be held, somebody that can give them some tough love once in a while, but help them be successful. And that's really the key for angel investors is, besides the money, is how can they help that business? And what we found is with angel investors, sometimes they're very passive individuals. We had one of our investments, and it was actually our first investment that we made, was in a coil manufacturer outside of Omaha. And the founder of the company, it was one of those situations where he had his PhD in electrical engineering. He had run into some financial troubles before. Banks weren't willing to lend any more money to him. But he knew that, if he could get the financing, he had spoken in coil products. If you've ever been through an MRI machine, these are products they wrap around one of your extremities, and it helps take the image through the MRI X-ray machine. So he knew that he had the right type of business model here, but he couldn't get any financing. And through one of our funds, we invested $500,000, but he had identified one individual in Omaha who he had been on with one of his executive organization groups, who put $762,000 to match our $500,000, because all of our funds have to be matched. But this individual, he's, it's the typical Nebraskan. He has his office, very successful. You never know that the guy was a multimillionaire. He came and just kind of wrote out a check for $762,000 and invested money into this company. But he's a very passive investor as well. He does serve on the board of directors with us for ScanMed, but does not take a very active role in the company like we do. And you find that in some cases where sometimes investors, the angels they want to get their money, they want to do it for the right reasons, but they don't want to take a hands-on approach at all. And others are very active. I mean, they want quarterly updates from the business. They want to know how things are going, what the sales pipeline looks like. And sometimes they do request a seat on a board of directors, if you will. But also, when we talk about angels, one of the things, as I mentioned, we're trying to do is work with communities, and I know a couple of the communities that are on the line we've had discussions with, but when they are undertaking economic development type projects, so larger type products, attracting somebody to the local community, banks can only do so much, and sometimes it comes down to, well, what are some other financing mechanisms? And sometimes if there can be an angel group that's put together a fund who says, hey, we can commit $150,000 of our money, and maybe that's not equity, maybe it's a loan to the business to attract them. One of the things it does, though, it just speeds up the process, because you can identify right away who that group is and go to them immediately for the money. But you also have a group there who has created a fund where, if the right type of entrepreneurs come forward, they can be identified as well as a possible funding source for the business. So, these are all things that business needs to understand, the type of individual they're working with. And the business is going to want to do a little due diligence on the angel investor as well. I mean, there's probably some business people who've done very, very successful, but maybe they just aren't going to be able to work with and will be high maintenance for them, and maybe it won't be a good fit going forward. So passive versus active, we see it done differently all the time. But I guess that kind of leads into item number 5 of how do you identify who these angels are? And I mentioned the Nebraska Angels. So as it said, Nebraska Angels, there are 40 people, accredited investors who have been successful in the Omaha-Lincoln area. And the Nebraska Angels they've been around since 2007, and they have a very robust process of how they look at companies. So what a company does is they can go to their website. They initially say, we're very interested in being considered by the Nebraska Angels. They have an part-time executive director that looks at every single deal they receive, and they use what's called the GUST system. So it's a online platform where anybody in the United States can put their business idea into GUST and look for potential investors. Now, the Nebraska Angels, they're really centrally focused on Nebraska, but they are willing to look at things going on in Kansas or Iowa or around the Midwest as well. But what they do then, the executive director sends it out and says, okay, these fit our investment criteria. Back up a little bit. So look for those companies that fit their investment criteria, and then they have a selection committee that then narrows it down even farther to say, okay, let's look at these companies, and does it really fit with the potential that our members possibly want to invest in? And they have a selection screening process where they bring them in on a Friday morning. They do it either by telephone or physically bring them in to pitch their business. And it's about 6 individuals. Mark here in our office is on their selection committee. And they decide then, is this a company that we want to go ahead and be able to present to one of our monthly angel meetings? Now, the Nebraska Angels, they meet on a monthly basis at Quarry Oaks Golf Course. I think it's the second Tuesday of every month. And how they work is when they bring in a company, they allow the company 10 minutes to go ahead and do a presentation and pitch. And then they do usually right after that 5 to 10 minutes of question and answers from the potential angel investors. Maximum 2 companies a month. But then after those companies have presented, they kick them out and make them leave. And then among themselves, they have dinner, and then they decide, okay, is anybody interested in leading the due diligence process of working with the company, get the terms that possibly anybody else is interested in? Somebody leads that due diligence, and then the other investors step forward and say, hey, I'm possibly interested in this company. I'll work with you on this. And so it's a very informal process that they have. And keep in mind, again, these are business owners that have full-time day jobs, so they don't have a lot of time to invest through the process. But that's how they work. And, it's been going on for quite some time now. It's based on a model out of California. That's one model. There's another group in Omaha called Treetop Ventures that works a little bit differently. What they do is they identify the company, they identify the terms, and then they have an email list that they send out saying, we've identified this company, here are the terms, is anybody interested in looking at this a bit further to potentially invest in? And they let them know about it, and then they consummate the deal. And then as I said, you find individuals who are just willing to go ahead and invest when they come up and find out about different types of deals. And then what we're trying to do is work with communities to do it more on a local or regional basis as well. The third, what we found is in your local area, probably the best individuals that are going to know these individuals are the accountants. At one time we thought it was the banks, and then we thought it was maybe the attorneys, but realizing that all of these individuals have to go to accountants on a yearly basis. And accountants know as much details about those individuals probably as their spouses do, because they do all their taxes and know everything about their businesses. But the accountants also understand what is the risk tolerance for these individuals as well, and that varies. Probably tends to be a little bit more conservative in Nebraska, but we also in Nebraska, we are very, as we all know, very private, so we don't want people to know our business. And accountants kind of know what's going on in each of those possible accredited investors' business dealings. So if anything, if there's a business on the phone that wants to learn where I can go, it's always your accountants. If you have your business plan and your business idea and ready to go and looking for those investors, that's a good place to go. And then just basically your economic development groups. Usually there's the members that are on their board of directors are oftentimes business leaders themselves. So they understand about investing. Maybe they don't do it but they might know somebody else who does as well. One of the things we try to do, if somebody is wanting to look at angel investors, if there's any way that we can help them with their investor pitch or make it investor presentable, because at the end of the day, if it's a loan, it's kind of straightforward in interest and principal over a period of time. If it's equity, then it's probably a little more detailed, considering how much ownership the accredited investor is going to have and how are they going to get their money out in a future period of time. So I kind of wanted to just also kind of talk about how these angel deals are structured. As I mentioned, there are a fair number of angels we've run into who go out and loan businesses money, much like a bank does. It's a very sometimes simple process for those angel investors, but this individual that helped out ScanMed, he was originally just provided a loan to the business and had a little document, and his attorney had drafted up for the promissory note, and then as well as personally guarantee of the loan by Randy, the business owner. So we find that oftentimes they want a little bit more than the market rate, so they're looking for a higher interest rate than what a bank is willing to do. We've seen everything from 10% to 15%. It's also on a shorter time period, and sometimes these investors will do maybe interest only for a period of time and then principal paid at the end, or principal paid after a certain time, but sometimes they're willing to negotiate those terms. We've also run into situations where investors will do what's called a convertible note. So when a business comes forward and says, like they do on Shark Tank, I apologize for keep referring back to that, but a business comes in and says, hey, my business is worth $2 million. And by the way, we don't have any revenue, but I put money into this, sweat equity, it's worth $2 million. And the investor says, geez, I tell you what, you're not worth $2 million. You don't know what you're talking about. I really like you, though, and want to somehow help you out. What they default to is this convertible debt, where the angel investor might say, okay, I'm going to go ahead and provide you this instrument where by, after a period of 4 years, or let's say 4 years, you will pay me back, let's say, my $100,000 plus 10%. But if in the next 4 years, if you go out and raise more capital and the valuation of your company is set by somebody else, then I'm going to be able to come in at that valuation and convert my money, my investment of $100,000 into whatever equity price that other group has agreed with you. And so that's convertible into equity. That's why it's convertible debt. And then just the straight equity. We find that a lot of Nebraska companies sometimes don't understand that as well, because what they see is an investor putting money in, and that investor is someday going to come in and control their company. And what we try to show is that, number one, usually it's the board of directors. If it's structured the right way, the board of directors is the one that makes most of the decisions for the company. But oftentimes these angel investors, they have no desire to run. The angel investors, they have so much going on in their lives anyway. The last thing they want to do is come in and run a company day to day. But there's a lot of horror stories out there about individuals, probably not as much in Nebraska as other places, about somebody investing and then coming in and taking control of the company. But equity is one way to go. The good thing about equity is, for a startup company, you don't have to pay anything back right away. You don't have those interest and principal payments hanging over you when you're still trying to pay salaries and everything else you have. You just have probably a larger share of what you have to pay at the end. So sometimes, in this case, I'm talking more about potential high growth kind of companies or technology companies. Usually, angel investors, and there's a study recently done where they're looking for, after a period of 5 to 7 years, they're looking for 2.5 times is usually the average money back. So if they put in $100,000, then after 5 to 7 years, they're looking for $250,000 back. Now, when the study that was done, keep in mind a lot of, and these are more, I think, robust type of angels that you would find, but, they're not only investing in one deal, they're investing in 6 or 7 or 8 deals. And oftentimes, out of those 6 or 7 deals, they expect one to do really, really well, and they expect a couple to get their money back. So a 1x return, they put in $100,000, they get $100,000 back, and then the other 4 or 5 are going to fail because of the high-risk nature of startup companies. So they're hoping to get back a higher rate of return on that one company that does really, really well. But again, I think for Nebraska, we don't have any preconceived notions that angel investors have to receive this amount back, because our ecosystem that we have for entrepreneurs, it's developing quite rapidly now, but it's taken a while compared when you look at other states. And I think some of the programs the Department of Economic Development has put into place for prototype grants for a business to just actually get a grant to build their product or their process that they're developing, some of that starts to really help out that whole business financing continuum to help a business actually get to a point where they either can get investment financing or possibly even to a point where they can get some more micro loans or bank financing as well. So that is about 40 minutes of me rambling on off of my notes. So I'm open to any kind of questions anybody might have or comments going forward.
Dan, this is Heidi from Grow Nebraska. I was going to ask if you could tell us a little bit more, if they want to work with you, what should they do? As in the individuals on the phone call, if they want to work with us? Mm-hmm. Okay. So one of the things, REAP has done this for years with helping out businesses with their business plans, and I know NBDC has, and Jim with Nebraska Enterprise Fund. All of these businesses are a little bit different in the type of business plans that they need. But sometimes they also need help with their investor pitches, and sometimes they need help in potentially identifying who maybe is a good fit for what they're doing. And sometimes, I know I have the list, the spreadsheet of some questions, and sometimes I'm looking at that thinking, well, maybe this business, what they're trying to do, maybe it's better if they become a nonprofit and they might be able to get grant funding through foundations. That would be a better fit than trying to go ahead and try to get an investor for their business. So, what we are trying to do is, help those entrepreneurs, if there's entrepreneurs on the phone, as well as, there's been times where we referred deals. If they've happened here in Lincoln, we refer them to either community development resources for some microloans, or Jim, being fairly new, but, we had a meeting, I think now, Jim, that was probably back in June, and it just seems like yesterday, but I always remind people, being a small state, it's only 1.8 million people. Our problem is we have such sparse areas. We need to create more density and work with the other service providers out there. So while something might not be a great fit for us, we try to refer them on to REAP or Enterprise Fund or NBDC. And we've gotten stuff from NBDC as well. And that, to me, is helping develop the ecosystem. But if anybody's on the phone, if they're looking for potential investors and want to have a private conversation, they can go ahead and call me. Usually we have one office line, and so unfortunately it's right in our area where we have our conferences and meetings, and so that's the only line we have in the office. So we oftentimes give people our cell phone numbers, but my cell phone number is 402-570-0075, or my email address is just Dan, D-A-N, at investnebraska.com, and Nebraska is spelled out. Perfect.
And the other thing, too, is I'll say, creating this density, sometimes what we find is if there's somebody in a particular area and they're thinking about things, and maybe we've run across somebody that's either done that before, who has a bit of an experience, we try to make that connection. And it might be somebody in another part of the state, or maybe it could even be somebody outside the state. But the great thing about Nebraskans is everybody is willing, if you ask somebody for help, they're more than willing to help out. And that's what we love about the state. So even if it's just making some connections, we try to do that.
Dan, this is Judy in Scottsbluff. How are you?
Good, Judy. How are you?
Good. I was wondering if you can share if you have any knowledge whatsoever about any sort of activity in angel investment that's taking place in western Nebraska.
Yeah.
And I mean the Panhandle.
Right. Yes.
Not North Platte or Kearney. Nothing against North Platte and Kearney.
No. I understand that. I'm not, to be honest, and it's probably been about a year now, I did have some initial conversations with Rhonda Pierce, and, we've talked about putting something together. One of the things we did in January is in this NIFA grant that we have, and as all, REAP, everybody's kind of limited in their time. In January, we brought on, Gary Hamer retired from the Department of Economic Development as their deputy director. And so in January, we contracted with Gary, because Gary is so well connected around the entire state, to help us really focus on this NIFA grant and helping getting angel funds going. And so I think, he's had some initial conversations in the Kearney, Grand Island, and Hastings areas, and I think Grand Island is probably moving along a little bit faster, but I know this fall our plan in looking for 2014, 2015 was to start having conversations with Rhonda out in western Nebraska as well. So that's probably the next, other than that though, Judy, I haven't run across a lot of examples out in western Nebraska, but I know there's business owners in the Scottsbluff-Garion area, as well as a couple I've talked to in the Alliance area that, are willing to look at potential investments.
Okay, that's helpful information. Thank you.
Sure.
It seems like we're going to have to really initiate this from a very grassroots level.
Well, and that's part of it is, we can bring some of the best practices and some of the things we see, but, oftentimes, Dan Hoffman coming out to Scottsbluff, Nebraska, and rightly so. What we've heard about is other groups that have sort of done this, and this is 10, 20 years ago, and they would come from Texas and come in and had these great splashy PowerPoint presentations and, say all the right things, and people would put money in, and then they'd have these huge fees to manage the fund, and they'd never make any deals, and then, it just puts a sour taste in everybody's mouth. And our intent is to do it the other way, is to say, look, we're going to go ahead and we're providing all that we can for support, but really this needs to be driven at the local level. And we will do everything we can to make it successful, but you've got to kind of have that one or two cheerleaders in the local community who are really willing to take this on.
Yes.
Dan, this is Linda Petty. Judy, another way to look at that is to look at the smaller model of Ord and Hastings and some other communities that have done the local investment clubs, where they're raising the money locally, and then because it's local money, they also have control of how it's invested locally. And sometimes those clubs are able to fund projects that are smaller than Dan or Invest Nebraska might be interested in, but yet vital in the community. So you might want to check out those examples.
Okay, thank you, Linda. Nice to hear your voice again.
Thanks, Judy.
Yeah, and I think Linda touched on a great point. One of the things as we're trying to do and going forward is, if these, even with the investment clubs, if somebody's putting in, $5,000 or $1,000, then they're trying to get something up to $100,000. Over the long term, it's going to make those investors a little bit more savvy of even though they're smaller investments, it's going to make them a little bit more savvy of investing in startup businesses or businesses in their local area.
Is it possible that this kind of angel investment activity is taking place and you would just not even have it on your radar? Or do you think that you have a good handle?
No, I think there's a lot, I don't want to say a lot, I think there's a fair amount going on that, again, that nobody knows about. I know there's an individual in Kearney who he's taken a couple different companies and he kind of rolled them under a kind of an umbrella organization, but he's talking to individuals in central Nebraska getting investment, and he's getting investment, but otherwise nobody would know about it. Nothing's in the paper, and that's good in a way. I mean, it's private, but it's also hard because we're not talking about the activity, and you kind of want to, at some point we need to let people know things are happening, and that those, whether they're successful or not, it just goes to the whole issue of a good, robust ecosystem that people are aware of in the community or region. I might add too, I left out probably the largest group of angels in Nebraska are actually Kappa out of Kansas, or out of Kearney, and they're all made up of, I think they're up to 450 farmers who had invested in ethanol, who are, as a group, Kappa looking at deals to fund that are around value-added agriculture. I know, talking to Marge Lauer, I mean, they get a large number of businesses that come to them. They turn a large number away, but they're looking for those businesses that are kind of in their investment criteria, a lot around value-added agriculture. But forgot about them. They're the largest angel network in the state right now.
Anybody else have a question for Dan? We're just about out of time, but we've got time for another question or two.
Call me.
If not, I really want to thank Dan for his time and for helping us all gain a better understanding of the angel investing process. We hear a lot about it, but very few of us actually understand it. The next training on the third Thursday, I'm hearing a double conversation. The next training will be September 18th with Jill Sloop, and she's going to be talking about why customers buy.
If they get generally any kind of social benefits that they get from the government, that also qualifies.
Well, thank you so much, Linda and Heidi, for inviting me today, and thank you, Monica, for sponsoring the noon hour luncheon.
Right. I was hearing a double conversation, so that's kind of why I stopped. If you're interested in Jill's presentation or this series, it's always the third Thursday of every month. It's always free. It's a simple call-in, but you do have to register so that we can present the handouts and things. The next one, like I said, is about customers. Why do they buy? How do they accelerate their sales? And if you're interested in joining Grow Nebraska or learning more about it, info@grownebraska.org. And we'd also invite any of you on the call who would like to become a trainer that would have a topic of interest to small businesses, or if you would like to sponsor one of these events. You'll find more information at the opportunities to do that at www.grownebraska.com, grownebraska.com. And if you aren't signed up for the newsletter, please also take the advantage of time and sign up for the free Grow Nebraska newsletter. Look at the site for the variety of wonderful Nebraska products that are marketed through. Thanks again to everyone who participated.
Thank you. It was very interesting.
Thank you.